Hey, hello everyone. Hope you're well, and welcome to our weekly market analysis on our Triangle Academy YouTube channel. And if this is your first time of visiting this channel, we wanted to please like, subscribe, and share. So we'll be analyzing the Australian dollar, Swiss franc, and we'll be looking at the institutional order flow from the weekly perspective. And you could see that price is currently in a downtrend. We're going to make this very easy for you to see. So price is currently in a downtrend, and also in the monthly, price is also currently in a downtrend. And where is it targeting? Personally, I want to believe that price is actually heading here to fill this imbalance here. So that is where I think the price is heading to, because that is how price works. So wicks should not be ignored. They are not empty spaces. They are actually orders. All right, they are actually orders. So just because you see a candlestick, you think, oh, that's all it is. No, wicks tells stories of price movements. All right. So since we have this much long mitigation here, rejection, so we have to understand that price would might do a series of lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, lower highs and lower lows to fill up this imbalance, weak imbalance here. All right. So then probably we could actually find a shift of market structure then to the upside, then clearing out liquidities here, orders here, here, and here. That could be what would happen in the long run. All right. So I'm going to delete. I'm going to go to the daily time frame, so we don't waste much time. The time frame. So so you could see that price, the history of price was from this region, here, created this move downwards that broke structure. All right. So when it broke structure, price reacted to these previous lows. Price reacted to these previous lows. Sorry for the drawing. Price reacted to this previous low. But what do you observe? I want you to see something. I want you to see something here. Do you observe? Okay, I'm going to take this out. Let me try and take this out for you, so you think I'm going to use the horizontal tool instead of the drawing tool, so it could be neater. Yeah. All right. I'm going to use this horizontal tool. Okay. Yep. All right. Do you see that price just reacted to this order block here that sponsored the move to the upside? It didn't mitigate it fully, and it didn't break it. But when it reacted to this order block here, it didn't break structure. Instead, it moved the other way around. You see, so if you are to pick a region, a point of interest or area of value, this would be our own region where we intend to see price react to once again. Once again, this is a region where we will see price react to once again. And our trading range, okay, now I think I'm going to make this right now. So I'm going to make this very okay now. So our trading range will be from this region. Again, I'm going to use the the brush tool. Is from this region to this region. That would be our trading range. All right. We have buy side liquidities here. We have series of buy side liquidities here also. All right. So of which we could see an institutional candle sponsor that this order block here, presumably another block that would like to break this structure to the upside. Okay, but right now we'll be looking at both buy and sell opportunities. Okay, so what we'll be looking at is for price to come down to this level, come down to this level. Okay, this is a short. So I am looking for a long position, looking for price to react to this level again, to this region, clearing liquidities. All right. So we could actually use this O block, this O space, or use 50% of use 50% of the other block. So to minimize losses and risks. All right. So we could actually use 50% of these. Can you use this either this one or this one? So what we are expecting is price should find rejection somewhere around here. Somewhere around here, price should find rejection around here, come down here, either at this point or move lower a little bit um, to trigger this entry here, 50% entry, and move to the upside. All right. So that is the position right now. That is the position we're actually looking at on this time frame. But that doesn't mean that we cannot spot um, sell opportunities. All right. So we'll go to the 4 hours. Go to the 4 hours. So the 4 hours. So you could see. So when we move to the 4 hours actually speak the same language as the 1 hour on this pair. All right. So we are looking at certain reaction at this level because this level reacted, price reacted to this level, and we have a fair value gap that needs to be filled here. And if price should react to this fair value gap here, definitely we could see price getting to this point to actually mitigate another block to the downside here. So what we'll be looking at is to find out regions where we can sell. Okay, regions where we can sell. So we'll look at this region that broke structure. Now I want to take you through a journey. So price moved from this region to this region. It didn't break structure. It came down here to this region. It didn't break structure. Price was continuing to react to this region. Buyers here, buyers at this region continued to resist the sellers. Came here, nope. Up here again, broke structure. The buyers wants to buy, but the seller says no. So buyers are down here, sellers are down here, are up there. So buyers want to buy, but sellers are saying no, we don't want to. Okay, so creating tons of orders here. So you could see that this particular high here broke structure, this long structure, this series of support for those who trade retail. This is support for them. So they continue to place orders around this region, saying, oh, they're going to place a buy order from this region to this region. And what happened? They got stopped out. They got stumped out. All right. So we have a lot of people who lost trade here. Okay. So let me clear this out. Let me clear this out. Uh, yep. So you know, clear this out. So we could actually see from where we can place a sell. So our target is this region. I'm talking about an intraday sell opportunity here. Know fully well that the market is actually in a downtrend. Okay, so we can counter trend. When you go to the 4 hours, to the 2 hours, we can actually counter trend. So let us see what we can do here. So we're going to place, we're going to pick out this order block. We're going to see a return to order block, a fair value gap fill in. So this is where we are. So price, we want to see price, want to see price move, retest this order block and come down. Come down to where? Come down to this region. Let us go to the daily. So that the screen could accommodate um, we are trying to do. Come down to this region where we placed a buy order. Do you understand? So this is the I'm going to explain this again. This is the 4 hour, this is the 4 hours buy before you sell candle. This is the 4 hours buy before you sell candle. Remember that when we went to the 4 hours, we actually brought out an order block. So we are seeing, look, and we have an institutional candle going on here. So we want to see price retest, return to this order block, clear liquidities here and here, test this order block, then come down to clear liquidities, to fill fair value gaps, and trigger our entries to the upside. Are you getting this? So that is what we want to do. So we are going to make this very clean for you to see, for you to understand what we are seeing. I'm going to make this very clear so you don't get confused. You have to watch this video over and over again. This is our thought pattern. This does not mean that you should take this straight. You have to do your own analysis by yourself to see if we agree, if you agree with our bias. All right. So um with our bias, okay, yeah, I think we have to delete these up and up and up. So I want to leave certain um important stuff here. So let's go to the 4 hours. Go to the 4 hours. So we're going to mark out this region here in 4 hours. Going to mark out this region on the 4 hours, and we're going to place a sell, a possible sell, this region to the downside. Okay, this is what we'll be looking at. All right, so we're going to be looking at this, or we'll be looking at this region just to be on the safer side. Okay, just you never can tell. So this could be our two area of value for a short position. All you need to do is to train your eyes to see correctly, to understand the movement of the market makers. So you don't, so or it doesn't, trading smart money does not mean you are not going to lose trades, but it puts you in the same category as the market makers, the institutional traders, where you don't trade like the regular support and resistance, trend line, trend challenger. Those guys are just liquidities for the big money guys to feed on. Okay, so you need to stop trading like this. You need to stop blowing your account. That is why we have Triangle Academy to teach you how to trade like the banks. Okay, so this is our position right now. So we are looking at price to come up here to fill the liquidity, to grab liquidity here, to grab liquidity. Um, yeah, I'm going to use my brush. So to grab liquidity here to fill fair value gaps here, to mitigate here or here, whichever one happens. But we actually understand that price would eventually move downwards and clear out these tons of buy side orders here. We have orders here. We have tons of sell side orders rather here. So to fill the fair value gaps here also, because we have a fair value, we have an imbalance here that needs to be filled, and price will eventually come up here before we actually find another reaction. All right. So I want you to watch this video over and over again. You can ask your questions. Go to the description below this message on this video. Join our community. You can ask your questions. Visit our website if you want to take a course. on smart money trading. Okay, so thank you so much for your time, and I wish you a very wonderful blue or green profit trades. Thank you.